All right, let's start with the long-term trend in our market outlook. So currently, as of last night, our long-term trend went negative, and this is just an assessment of every stock on the New York Stock Exchange. Are they going up? Are they going down? Putting a blue moving average on it, that's what this blue line is. And then you understand, is it moving up? Is it moving down? So are more stocks going up, more stocks going down? As of yesterday, more were down. Actually, as of today, it's slightly up again. But what's interesting is for the past year, really until July this year, it's typically been running above. And that's typically a good market, not super strong. For other reasons, it hasn't been super strong, but big picture looks okay. But since around here, let me get my pointer out, laser pointer. But since around here, we dip below, and it's just kind of been sticking to the line. So it's not really a high growth market. And then back here in September, August, actually the end of August in my market commentary in the newsletter was surprisingly negative, and there was a lot of ugly things happening. And of course, the day after, things turned positive very quickly, and we actually did a good amount of buying and got back into the market. But you got to be very quick to say, okay, what's working today won't work tomorrow, and that's just kind of where it sits. So we had a good little run from the buy. I think it was around there, and now we're kind of going negative and getting choppy again. So I'm not sure how long we're going to stay too aggressive here, but so far it's okay since today bounced back a little bit. Midterm cycle, this runs our enhanced index models and our short-term thinking, right? So this is when this is going up, money is coming into the market and accelerating. When this is coming down, money is still coming into the market, but it is decelerating, right? And actually, this is lower than it was as of last night. This is, I think, 114, and now we're somewhere in the 70s or 80s. So this is not improving, which is what I wanted to see today, although the markets are fairly flat, and that's not terribly exciting. All right, so our sector ratio, positive to negative, we're looking at 6 to 5. Currently, the strong places are real estate, technology, communications. Utilities are good, but they're weakening. Healthcare is good, but weakening, and consumer discretionary is actually doing okay. The negatives, we've got a few new negatives on the MACD. Now, that's not exactly the same signal that we use to determine are they positive or negative. The positive or negative really has to do with who's in charge, or the buyer's in charge and the seller's in charge. MACD is just an oscillator to say, is price strong, is price weak? So price is weakening even though it is it's on the negative side. So over here we have energy, for example, is positive for a day. So price movement is okay, but sellers are still kind of in charge of that. Right? It was a very odd, long description. But what we like to watch in this is day to day is how many sectors are positive and how many are negative. About a week ago, we had 10 sectors positive, and then you watch one by one, they kind of drop off, and then we have the weakness. So it's not promising for how we move into this month, but it's too early to tell. It's too early to tell. Last month, Will had an excellent chart, and I wanted to call back to it. Thanks, Will, for doing the market commentary last month when I was out. He showed it's the up down percentage volume of the S&P 500. I think he did the S&P. Well, that's what I did. So what this is what's the volume of stocks going up and versus stocks coming down? And this is just a moving average to kind of give you a sense of, is the strength positive, is the strength negative? And really, until about May, it was typically on the positive side. And that's something that Will showed, and you can see his video on our YouTube channel from last month. But since then, we're spending more time below. This last little jump was good. I think we talked about that. Actually, this was the buy we were talking about in August. It got pretty good. And then now we're kind of not real exciting anymore. But going back to Will's chart, he showed that if you take the top 10 performing stocks out of the S&P 500, the S&P is not rising very much, right? So this looks like things are going pretty well. You take those out, and this is like a flat line. It looks like death, right? Death in the hospital. You're not going anywhere. So there's a lot of interesting underlying things in the market that we are still concerned about. It's not just hey, dive in, buy whatever, and go nuts. I miss those markets. Those are easy to deal with. But right now, you got to pick your battles. You got to be very, very quick. And if something goes wrong, you've got to cut the losses. You just don't know what's going to go wrong. And then finally, I'm going to show you again, calling back to Will's last month chart about seasonality, right? I want to look at the last 10 years instead of the last, I believe he did 50. So typically September, in the past 10 years, is up 50% of the time out of, you know, the amount of times it's up versus down. Now, if you go the longer period of time, I think it's 50 years. This is down in the 30s or 20s, even depending on when you're looking at it. September is historically not the best month of the year to be invested. And October usually starts off that way, but it tends to finish strong. So that's a 56%, but the average return is a little bit higher. And then you get into November, much like Will referenced, that's when you want to be aggressive and usually get into it, because the market typically goes up, and it goes up pretty well after a slump in September and October. So we're kind of playing it safe, being very cautious as we come into that time. And then hopefully we get a good sell-off that we can buy into and have a great finish to the year. And that's what I was referencing in our newsletter as well. So hopefully that gives you some good context.